Hello students, welcome to the online lecture of BCom semester 2, subject Accountancy, unit number 1. In earlier lecture we have discussed the sum number first. Now we are concentrating on the sum number 2, but before understanding the sum number 2, we must have to get an information regarding the valuation of closing stock. When the wall goods sent to the consignment is not sold, the value of closing stock is erased. It means the consignor has sold 1 lakh rupees goods to the consignee, but consignee sold from this 1 lakh rupees goods only 80,000 rupees goods. At that time, 20,000 rupees is considered as the closing stock. This closing stock is need to be recorded into the consignment account. The reason why the journal entry for closing stock is closing stock of consignment account or stock of consignment account is debit to consignment account credit. It means into the book of consignor, the account that we are preparing consignment account gets the credit effect of the same transaction. Stock on the consignment will be shown at the asset. On the asset side is the balance sheet. It means when we are preparing the balance sheet, at that time we are making the entry for closing stock, and closing stock is always post at a asset side. So consignment account credit side is also showing the same situation. The reason why we are posting the consignment account credit side. In the beginning of the next accounting year, the above journal entry is reversed. That is the consignment account debit to stock on consignment account. Now we have discussed that how to post the journal entry for consignment account. Let us discuss to valuation of closing stock of consignment account. When we are finding the cost price of consignment account, by I had exampled you earlier that if the consignor sends goods of rupees 1 lakh to consignee and consignee sells from this 1 lakh rupees goods only 80,000 rupees goods, so 20,000 is considered as a closing stock. But wrong, only this 20,000 is not the value of closing stock. This is just a cost price of closing stock. In the value of closing stock, we must have to add the proportionate expense of consignor, proportionate expense of consignee, and certain number of expenses also need to be deducted at there. So let us discuss what is the proportionate expense of consignor. Proportionate expense of consignor are added into the cost of goods lying unsold with the consignee. The expense incurred on the sent is increase the cost of goods. For example, if the goods worth rupees 5,000 is sent on consignment by consignor to consignee, for sending these goods, consignor has paid 800 rupees expense, which incurred the sending of goods. The proportionate expense of closing stock will be evaluated as follows. Whenever you are sending the goods of rupees 5,000, your expense is 800. So if you have the closing stock 1,000, then what will your expense would be? So the expense is 160. Once again, whenever you are sending goods of rupees 5,000, your expense is 1,000. Then how much money is proportionate consignor's expense for 800? So from 800, 160 rupees is your proportionate expense. For 5,800 is expense, for 1,000 is 160. So 1,000 is the cost price of closing stock. Now proportionate expense of consignor, that is 160. So 1160 is the closing stock with the value which is including the proportionate expense of consignor, as well as the consignee's certain number of proportionate expenses also need to be added. There are two kinds of expenses paid by consignee. The two kinds of expense is considered as a recurring expense and non-recurring expense. With this literature we can see that certain number of recurring expense and non-recurring expense. Then what is non-recurring expense and what is recurring expense? as I told you that consignee is making expense two type. Recurring expense means those kind of expense that is paid by consignee time and time. For example, go down rent. The consignee is paying the go down rent after the completion of every month. Insurance, after the completion of one period, consignee must have to pay once again the insurance. Office and administrative charges like a salary of workers, rent and taxes, everything are considered as a recurring expense. And whenever we are calculating the proportionate expense of consignee, we are not including the recurring expense. We take only the non-recurring expense of consignee. So in the sum we have given the clearing charges, then we will take it in the calculation of proportionate expense. But if in the sum it is given that go down trend, then we are not able to take it in the calculation of proportionate expense of consignee for closing stock. It means clearing charges, customs, octroi, carriage inward are the non-recurring expense that need to include in the calculation of proportionate expense of consignee, while the recurring charges, go down rent, insurance, office administrative expense, selling and distribution, and so on, are not need to be take as a proportionate expense of consignee. First of all, we will have to take the cost price of closing stock. Then we will make addition of proportionate expense of consignor. Then we add the proportionate expense of consignee. Then what about the formula for cost price and market price? The closing stock should be valued at cost price or market price, whichever is lower. From the calculation of both of them, if we find that cost price is lower, then we will consider cost price as a closing stock. And if we feel that the market price is lower than cost price, then market price should be considered as a closing stock price that is posted into the consignment account credit side. When the closing stock of consignment contain damaged goods, it must require repairing. This reduces the value of closing stock. Alternatively, reserve may be created for the extent of the estimated expense of repair. Some of the authors are writing that repairing charges is deducted from the valuation of closing stock. Following is the table which shows that what to do for repairing charges, what to do for proportionate expense of consignor, proportionate expense of consignee. So first of all, we will have to find out the cost of goods sent, which is in unit and rupees also. From that we will have to add the expense paid by consignor. The total cost of goods sent. The total cost of goods sent is denoted. It contains two things: the cost of goods sent and the expense paid by consignor, less goods destroyed in transit. It means normal wastage may also be at there, abnormal wastage is also at there. That means goods destroyed by transit. Goods that not reach to the consignee, that is also one part of destroyed goods in transit, minus shortage, normal loss in units only, that is also need to be deduct. Then add consignee's non-recurring expense. So with this calculation, we find the cost of sellable goods received by the consignee. So the above statement is for cost of sellable goods received by the consignee, that will be utilized to evaluate the cost of closing stock. The formula for calculating closing stock is as follows: unit of stock. If we are able to calculate the unit of stock, then it is used at here. After that words, cost of sellable goods with the help of above table. Then sellable units, that is need to put in denominator side. So this is an example of closing stock. In illustration number 2, we have an idea that how to evaluate the closing stock. Hemant sent 100 bicycles to Rajesh at 3000 rupees. It means 100 cycles into 3000 rupees, that is goods sent by consignor to consignee of 3 lakh rupees. He paid 12,000 for freight and carriage. It means consignor had paid 12,000 rupees. So whenever we are calculating the proportionate expense of consignor, at that time we will take consideration 12,000 as a full value of paid by him. Rajesh paid 9,000 for custom and carriage. So 9,000 is non-recurring expense that also can be calculated, that also can be taken into the charge while we are calculating the proportionate expense of consignee. When Hemant received the informations about the sale, consignee has sold 80 bicycle at 3720. So the market value of bicycle is 3720. Market price is 3720 and the cost price was 3000. Let us evaluate the following circumstances. But before evaluating the following circumstances, we have another expense paid by consignee. That expense is 15,600. But this expense is for advertisement expense, so it is recurring expense that cannot be taken in the calculation of proportionate expense paid by consignee. But while we are making the consignment account, at that time the total expense for consignee is how much? 15,600 plus 9,000, that is 24,600 expense paid by consignee. So we have three alternates to evaluate such the value of closing stock. The first information is the market value is 3720. So 20 bicycles is closing stock and 3720. 20 cycle into 3720. It results in 74,400. So the market value of closing stock is 74,400. Let us evaluate the cost price of closing stock. So first of all, we made the calculation as I had explained you earlier, that 20 bicycles are not sold by the consignee. The cost price is 3000, which is at there. So 3000 into 20, that is 60,000. Now evaluate the proportionate expense of consignor. When 100 bicycles are sent, the expense paid by consignor is 12,000. Then what is the expense for 20 bicycles? So it results in 2,400. 60,000 plus 2,400. Now proportionate expense by consignee. When 100 bicycles are sent, consignee had paid 9,000 the non-recurring charges. Then what is the expense for 20 bicycle? So it is 1800. So 60,000 plus 2,400 plus 1800. It results in 64,200. So the cost price of closing stock is 64,200 and the market value of same 20 bicycles is 74,400. Both of them cost price is lower, so it is considered as a closing stock. We have another example at here, not another example but another circumstances, that the market value of bicycle is 2850. So with the help of cost price of evaluation, we have idea that 64,200 is the cost price of 20 bicycles. If we consider 2,850, then 2,850 multiplied by 20 bicycles, so it results in 57,000 only. So 57,000 is less and 64,200 is more in comparison of both them figures. So in circumstances number 2, we can consider 57,000 market value as a closing stock. Now the third circumstances is also there. Market price is 3720 of 20 bicycles, but bicycles were damaged, and because of damage we will have to make a repairing of per bicycle by 120 rupees, 120 for one bicycle. Then what is the value for 20 bicycles that is need to be deducted from this 64,200? So first of all we evaluate the closing stock with 60,000 plus proportionate expense of consignor 2,400 plus proportionate expense of consignee 1,800. So the cost become 64,200. From 64,200 we will make deduction of 2,400. This deduction is for what? For one bicycle the repairing charges is 120. So 120 into 20, that is 2,400. So the cost price of the same bicycles is 64,200. From that we are deducting 2,400 repairing charges, as we has discussed it in the above table. So repairing charges is need to be deducted. So from 64,200 2,400 is deducted. So the value of closing stock as per the cost price is 61,800. If we consider the market value of same closing stock 3720, it results in 74,400. So from the both the figure 74,400 we have the less value 61,800 is considered as the closing stock. So this is the end of illustration number 2, which explains you that how to evaluate the closing stock in the case of consignment account. Thank you.